Now, let's see, for example, the going concern assessment may be a significant risk. Revenue recognition, a significant judgmental area in some situations. Effect of new accounting standards, sometimes major judgmental area. Impairment of assets, significant event. Valuation of financial instruments. Measurement of retirement benefit liabilities. Significant transactions may be disposal of a business unit, business combinations, deferred taxation, goodwill impairment, provision for contingencies. These are all areas and matters which the auditors normally discuss with the boards as critical audit matters when they finalize the audits. But those matters now will take form of key audit matters to be reported in the auditor's report. Now, currently, how to select the key audit matters based on the definition, as I said, you have to report significant risks, you have to report significant judgmental areas, and you have to report significant events or transactions. But all these matters are currently also communicated to the board through a communication which happens between the auditors and the board while they finalize the audit on a yearly basis. And those communications which are happening currently should be the starting point to select the key audit matters. So the standard actually provides a decision-making framework for selection of the key audit matters. And the guidance says that you need to go through those matters which have been communicated to the board and select out of those matters which are most significant to be reported as key audit matters based on the auditor's judgment in the auditor's report. So key audit matters is a subset of the matters which are required to be reported to the board under the current auditing standards. Now, there is a very elaborative and extensive auditing requirement around what to be communicated to the board as part of the audit of the financial statements. So the communication with those charged with governance, as we refer technically, is covered under a separate standard and a separate auditing standard, which is not changing. What is changing is that we need to select out of that communication certain matters which are of critical importance to be reported as key audit matters in the auditor's report. So the starting point is the current communication with the board of directors. Sensitive matters, the standard does allow for a situation where, extremely rare such situation, that there are certain sensitive matters, for example, some investigation or fraud related issues, and which may take the form of a key audit matter because they're so significant sometimes. But if an entity believes and the auditors are convinced that the matter is sensitive, then the standard provides an exception that maybe because of its nature, because the matter may prejudice an investigation which is happening on the same matter, that matter can be excluded from reporting of key audit matters. But this is a complex judgment. It is not easy. It's not easy to say that every matter is sensitive. So therefore, the standard itself requires that in such situation, the auditor may consult a lawyer or take a legal advice before determining whether this situation or matter is sensitive or not. So it will be extremely rare because in normal situations, all matters that are critical or important to the financial statements, hardly contain elements which can be regarded as sensitive information. Now, key audit matters, what to state. What to state in the key audit matters is why the auditor consider the matter to be significant. Number two, how the matter has been addressed in the audit, and also a disclosure, because the key audit matter should always be explained with cross-reference of a disclosure which has been made in the financial statements. That is very important. The key audit matter will never be explained in isolation. It always be cross-referred to a disclosure where management will have full opportunity to explain the matter in their own language and their views about that matter. The auditor will highlight those key audit matters by referring to a disclosure and also give an explanation of how the key audit matter or the matter has been addressed through its own audit procedures. So the key audit matter is not a qualification. It's not an observation or reservation. It's important to note. Key audit matter is a matter which has already been addressed satisfactorily in the audit process, but is important to be shared in the auditor's report. So therefore, the disclosure is important of the same matter. For example, if you look at a goodwill impairment. So how the management has tested goodwill, what procedures have been performed to undertake an impairment test for goodwill, what assumptions have been used, will still be explained in the disclosure in the financial statements. And the key audit matter will provide an insight about what audit procedures the auditor have performed to satisfy himself about the work that the management has done about the impairment testing. So the matter is so critical to the financial statements that the management view and the auditor's position and the procedures that have been formed to address that matter needs to be explained through a key audit matter. Now, points to note about key audit matter is that the intention is that key audit matter should always be specific to the entity. Now, we as auditors have this tendency to basically use standard language, to take a standard language and then use it across different reports, which is actually not the purpose of these changes. The very purpose of these changes is the auditor's report should be unique to each company, should be unique to each company's circumstances. Every company have different risks. Every company has different events or transactions, and every company have unique judgmental areas. So therefore, the auditor's report should explain the specific situation, should not explain a general situation, say about an industry or about a particular segment of the corporate sector. It should explain a specific issue or situation about the very company which is being audited. So, and that is the reason why you find very little example or illustrations about the key audit matters in the auditing literature as of now, because the idea is not to create standard big paragraphs across all the audit reports, but the purpose is the auditors should be providing specific entity-specific information through their reports. Audit report, a key audit matter is not an audit qualification. It does not mean in any way that the auditors are expressing a reservation or observation or their dissatisfaction or disagreement about a matter which has been reported as key audit, because there is a separate place to report a qualification and the opinion then is modified. That is a different thing altogether. The key audit matter is where the matter which has been addressed by the auditor in the audit and how that has been addressed. Key audit matter should not be seen as a primary source of information. The auditor report is not a primary source of information. The primary source of information is still the disclosure in the financial statement, which provides a full story. The auditor report is just providing what the auditor has done about that matter. And certainly, key audit matter does not mean that the auditor is expressing separate opinion on each of the key audit matters which are reported. The auditor's opinion will still be on the overall financial statements taken as a whole. So just that each and every matter or all significant matters have been explained, it does not mean that the auditor is expressing separate opinions on each of the matters independently. So auditor is taking a view about the truth and fairness of the financial statements as a whole, whether or not the overall picture, the overall profit and the overall picture presented by the financial statement give a true and fair view or not. So that has to be kept in mind. Now, I think this was the part which dealt with, what is the change, essentially an overview of what the standards now requiring us to report in the key audit matters and extensive requirements and extended reporting on going concern and certain other enhancements in the auditor's report. But let's now, I think, see what could be the effect of reporting of those key audit matters on the companies, on the audit profession, and also from a regulatory point of view, what we can expect the impact to be. Now, as I said, key audit matters does not change the audit scope, nor it changes the responsibilities of the board audit committees. So the audit process and the audit procedures and the auditor responsibilities remain the same. The board responsibilities remain the same. It's just the reporting and visibility of those responsibilities through the auditor's report, which is increasing. Now, when you have lots of key audit matters about going concern, revenue recognition, major transactions or major provisions or judgmental areas reported through key audit matters, certainly it will gain attention of the regulators, of tax authorities, of those who are users of financial statements. And then people may start comparing those key audit matters from company to company and may challenge the auditors, first of all, that why one auditor has considered in one case of a company a certain matter as key audit matter and the same is not being considered as a key audit matter in the case of other companies. So people will draw comparisons and then challenge the auditors. Also, the regulators will pick up matters from those from those key audit matters, and not only challenge the auditors, may require more information from the companies and the boards about how those matters have been managed by the companies, and what are the governance issues around those matters, and so the engagement of the users with the auditors and the companies may increase because of the visibility of all those matters through the auditor's report. Also, I think a lot more communication will be required between the audit committees and the auditors. Currently, the auditors meet the audit committee in case of listed companies once or twice a year, and that meeting or that communication is around, at the planning stage and the conclusion stage, and through exception, the audit committees normally ask the auditors, what are your observations or any adverse remarks about the financial statements or internal controls or anything. So the reporting is usually by exception kind of a reporting. But now I think when the key audit matters will have to be reported, the engagement of auditors with the audit committees is expected to be increased in a big way, because audit committees would like to understand what is being reported about the company and how the audit committee has addressed those matters in their review of the financial statements. Because what you're doing now is that you're also highlighting the work of the audit committee through the auditor's report. Because when the auditors are highlighting certain key audit matters, the audit committee must be very comfortable as to how those matters have been addressed in their review of the financial statements, and therefore the engagement of the auditors and the audit committee and the time the audit committees normally spend on the financial statement is expected to increase significantly as a result of this change. Just to give you a flavor of it, I think this is just an example of a key audit matter. How would it look like? Say this is goodwill impairment. In the first paragraph, it has been described as under IFRS, the group is required to annually test the impairment of goodwill, and this annual test was significant to our audit because of the balance of the goodwill. And then the management process is complex and highly judgmental, etc. The first paragraph describes why it is significant to test why the goodwill impairment is a significant audit matter. And then in the second paragraph, the auditor is explaining our audit procedures included using a valuation expert in assisting us evaluating the assumption and methodologies, in particular relating to the revenue growth, etc. and etc. And thirdly, in the last paragraph, the auditor is explaining the company's disclosure about goodwill are included in note so and so. So if this kind of an explanation will go, in the auditor's report about all the significant matters, you can expect how much insight